Hello, you're watching the Restimators. We are on week number 3 in our early retirement journey. And yes, we are doing it together. We started a public account with $50,000 and every week we deposit $500. Our goal is to reach $700 in 10 years by maintaining a yearly return rate of 15%. Every Monday we make trades on that account. If you want early access to these transactions, you can sign up for the retirement tracker. But more on that later. Today, I'm excited to share we started a new position with PayPal, ticker symbol PYPL. PayPal is a financial technology company that is enabling you to send money all over the globe using apps like Venmo, Shun, and PayPal, of course. I'm an active user of all these platforms, and I really like the user experience. Let me unpack why we made the decision to buy it. Starting with PayPal technical analysis. Here's PayPal daily charts on TradingView. Back in around July, it was trading at all-time highs around 310. They announced the earnings and they missed on revenue for the very first time in a while. So if we go back here, they usually beat both earnings and revenue, and then the stock reaction just after earnings is just shooting up. If you look back in November of last year, and we draw a horizontal line that is working as support, where the price tries to break through that and comes back. So this is roughly 190. It's the support level for PayPal. I do think that we're going to test those levels again pretty soon. That is not my expectation to time the market, to buy it today, and tomorrow is just like a breeze upwards trend. That's not what I'm looking for. I'm starting to build the PayPal position right now, and the last thing I want is for that stock to shoot up because I can't buy anymore if the price is not reasonable. So now let's take a look on PayPal fundamental analysis. If we go back on the more financials in TradingView and open the overview tab, I like to look at the quarterly levels. If we compare in Q3 of 2020, they brought in $5.5 billion in revenue on a profit margin of 18%. This time around, they increased the revenue, decreased a bit on the profit margin. You want to see these lines here growing, and given the competition, they are having to innovate, invest in research and development, probably come up with more competitive fees when you transfer money. The quarter is pretty good. They usually beat estimates by quite a lot. So right now, since the competition is picking up, it's not like the case anymore. It's tightening up. The analysts and the actual results are coming very close. The balance sheet is looking strong. The debt to asset ratio is around 70%. So you have a growing assets coming in to the company. So very healthy, very similar to Alibaba. That's the type of companies that we want to add to the public account. So if we go to the statistics on PayPal, price to earning ratio is selling to the lowest levels that I could think about going back multiple quarters. So I feel pretty good with the both technical analysis and the fundamental analysis. Prices are still expensive compared to the philosophy behind value investing. There is a chance that this is still can go down and reach the price to cash flow around 20, price to book ratio where you want to stay close to $1, so you're paying what the company is worth. And Warren Buffett, he tries to buy things below book value. That's what he means about it. He wants to buy things under 1, and here it's 10 times. So yeah, I like PayPal. I think it's a great addition. I don't think it's this cheapest value play that you can find out there, but I like the RSI. It's below 30. The company is solid. It's wanting to test the resistance and probably bounce back and start continuing on the bigger uptrend that has been going on before COVID. So this is March. It's on an upwards trend. So it's going to test here probably and continue the uptrend the coming years as long as the business continues to succeed. Now let's head back to the retirement tracker and understand our performance this week. We were down about 2.7%, while our personal SPY gained 0.65. Remember, this personal SPY is measuring how much money we would have if we invested everything in SPY instead. So yeah, we are lagging. The goal for this account is to beat the S&P 500 in the long run. Let's spend some time going over why I think both Alibaba and PayPal have started selling off this week and what I'm doing about it. This week, Alibaba released their quarter results and missed both on earnings and revenue estimates. The company is still making money. Quarter over quarter, Alibaba is still making more money in comparison. Back in 2020, Alibaba was trading for $300 a share. Now it's trading for half that price, even though they increased the revenue year over year. That's why it's really important to understand the stock price before starting to build a new position. Now, with the added risks with holding Chinese companies, the stock market's not willing to overpay for growth. But honestly, I'm just excited that I'm starting to build a position with a growth company that is trading at a discount. I know my chances to outperform the market are higher that way. Okay, here's another reason. Both Alibaba and PayPal are on a downtrend for the year. In fact, year to date, Alibaba is down close to 40%, while PayPal is up 0.49. Just so you know, year to date, S&P 500 is up roughly 32%. What a bad year for Alibaba and PayPal. What are investors doing now with these big losses? The big hedge funds are selling, and let me tell you why. They are applying a strategy called tax loss harvesting. The name sounds very complicated, but it is a really simple idea. You sell off your big losers for the year to offset taxes that you would have to pay for your winners. Let's say you have been holding Tesla for years, and this year you finally decided to sell. You have to pay taxes over those big gains. To try and reduce the tax liability, you sell off your biggest losers. You wait 30 days and then you buy again the stocks you sold. You want to wait 30 days because you don't want to be flagged for wash sale. We are in November, and I honestly believe that this week was the start of that process. Think about it. We are about 30 days away from the end of the year. Since we have just started to build our portfolio, we can't even try to implement that strategy. So what I'm doing, I'm buying more. I'm excited for Monday, where I'll be buying the third stock, by the way, also at a great discount. And definitely, I'll be buying more Baba using the 500 deposit. I hope you are happy that our stock picks are falling. It is really rare that you buy a company at the bottom and after that it's just going up and up and up. Give it time and we'll be alright. I will see you next Sunday.